In my opinion, the stars are aligning in favor of gold, and the bull market is far from over, contrary to what some stock traders may have believed. Neither 4,000 nor $50 is the top in silver. In fact, neither is any amount of silver. Actually, I think 50 is now the lowest price for silver, isn't it? You should buy the floor if the price drops below $50, correct? 50 is likely to replace 30. When silver broke through the $30 mark, I also predicted that it would serve as support. And just like that, everything transpired. Here we are, 50, after a couple of slips below. 50 could be the next level of support. Buying silver for about $50 is a fortuitous break, in my opinion. It's fortunate for you that we were able to sell it. And you can bet there are plenty of shorts. It seems like we haven't squeezed the shorts quite yet. Silver is a metal with several short sellers. They likely came out on Thursday to sell and lend a hand, in my opinion. A jackhammer swing through the market in an effort to safeguard their short positions. But I fear the silver market is in for the worst short squeeze ever. Plus, guess what? The wait is finally over. I believe the silver shorts are in for a rude awakening. So I will not let myself be devastated by a silver shorts team that loses a substantial amount of money. The gold and silver markets had quite the week. You know, last week during the Friday market wrap, I brought up the possibility that last weekend was the last chance to buy silver for less than $50 and gold for less than $4,000 per ounce. Plus, guess what? The fact that gold has risen above $4,000 suggests that this might have been the case. Actually, it soared to $4,000 on Wednesday, setting a new record that I seem to remember being around 56 years old. Silver really broke through the $51 mark twice yesterday and again today. Well, there was some resistance up there. A large sell-off occurred yesterday when silver's price gapped up to $51 in either New York or New York hours. The price of silver has fallen below 49 again, whenever the price reaches 51. For that reason, the new high was peddled by many. Now, many were worried the day before that silver wouldn't rise beyond $50. On Wednesday, silver stocks were low because I believe traders were bracing for a fall. After Thursday's massive price spike, silver and gold stocks experienced their worst trading days of the year, if not the bull market, as they dropped from their all-time highs. An example, silver equities on a day when the price of silver finally broke through the 51 mark and ended above 49. Still a very good closing, but still short of 50. There were a lot of silver stocks that fell by 5 to 8%. And just to prove how anxious investors are, they flee the market at the first hint of a possible top or correction, and they got hammered as a result. Given that silver bounced back and ended the week at a price above $50, among other things, I don't see any evidence to suggest that this is the case. This ranks first. The silver market closes every day. In terms of weekly closes, this is silver's best ever. Regarding gold, I feel the same way. A week ago, gold closed at its all-time high. It has never closed below 4,000 in reality. Plus, it's closed a week earlier than expected, surpassing 4,000. Not merely now, not merely the day. By the way, gold stocks were slightly lower than expected. The GDX fell roughly 2.5% week over week for the majority of them. Regardless, the GDXJ did manage to gain a little bit this week. All of this, however, followed Thursday's precipitous decline. If gold and silver stocks had regained at least part of their losses today, you would have thought it was possible. However, I believe it was averted due to the widespread chaos in the financial market. With a loss of 878 points, the Dow recorded its worst trading day of the year. Gold received more news coverage this week than it has in a long time. Now that the media is discussing gold, I began to wonder if there will be a pullback. So, it's doable, isn't it? A withdrawal could be in order. In my opinion, that is not a good bet. I still don't think we'll see a big setback, even if one does occur. For there to be such a significant correction, I believe there will be an influx of buyers into the market. Consequently, waiting for one is pointless. Buying these rock market wraps weekly seems like a lot more sense, doesn't it? Leave it till Monday. There's no need to wait until Sunday night. After you've watched this video, you should immediately go to Shift Objective and purchase some gold or silver. Make haste. No matter what time of day it is, you will be viewing this by Saturday morning or Saturday afternoon if it is Friday night. Every morning, even on Sundays. Until the Asian markets begin for trading later on Sunday night, it's quite unlikely that there will be a significant change. Therefore, every Monday, these markets have a gap up. Therefore, you should get in before that. Every week was the same. On Monday, the price of gold exceeded $70 per ounce. Just about $1's worth of silver was up as well. All of this week's profits were grabbed by anybody who followed my advice and bought over the weekend, but I forgot precisely how much. You received a 3% increase in gold and a 4.5% increase in silver. Now, my best prediction is that with these additional tariffs and the reimposition of that type of risk, the stock markets will continue to be volatile, risky, and unpredictable. Now that gold has closed above 1,000, it has achieved a major psychological milestone, and silver has followed suit, reaching a level never previously seen. Except for that, nothing has transpired. Although gold was reaching new heights, silver had failed to do so. The fact that silver hasn't even recovered to its 1980 high is one of the reasons I insisted that everyone should invest in the metal. It has now surpassed the peak of 1980. Not only did silver reach a new all-time high, but it also closed at a record high. So, silver has broken out above $50. Above $4,000, you can see gold breaking out. In my opinion, the likelihood of a stampede to purchase that breakout is far higher. After then, he will withdraw his money and keep the earnings. I believe the profit-taking actually took place on Thursday. It seems like the guys who were planning to sell the highs have already done it. Additionally, several less experienced players were eliminated as a result of their apprehension about the further decline in the industry. The fact that they escaped is fantastic. The market can more easily rise if you eliminate the lesser participants, the leverage players, and the ones without genuine conviction in the trade. Therefore, it would not shock me if gold and silver prices experienced a significant surge once again. I mean, come Monday, I wouldn't be surprised if silver breaks out above 51. And the location of the gold mines is anybody's guess. I mean, gold might be up $100 or it could close around 418 or something like that. It may even approach 4100. So it's not necessary for it to go up $100, but even a $50 increase would be a new record high. However, in my opinion, I believe such outcome is highly probable. Returning to my previous point, I am pleased to report that gold has recently been making headlines in the media. The most aggravating aspect is that they are completely clueless as to why it is increasing. The irony is that they covered up the real issue by blaming everything else. After all, who wants to face the music when they concede that gold at 4,000 isn't a positive sign? Especially Republicans, and anyone who watches Fox or the Larry Kudlow show wants to act like everything is fine. Reason being, they believe the economy is doing great. I can't think of anything better. As if Donald Trump were solely responsible, isn't he? Therefore, you shouldn't be concerned. Prices have dropped. The global economy is booming right now. Worldwide, no economy can compare to that of the United States. So, why is gold priced at 4,000? Indeed, why is gold displaying this red flag when so many positive developments are taking place? Well, it's not really a warning, they argue, in an attempt to downplay the significance of what's happening. One of the most entertaining theories put up by the Kudlow Group was that Europeans are purchasing because they are anxious about the state of their own economies. Inflation worries them, so it's clear who's hedging, isn't it? Of course, gold is also seeing a dollar price increase. The increase is not limited to the euro. Inflation is an issue for us. The United States' credibility issue is something they simply refuse to acknowledge. Our ability to repay our debts without inducing huge inflation has lost the trust of the international community. The world is losing faith in the United States in part because Trump signed on to the massive, visually stunning law, which exacerbated the deficits that Biden had already created. Furthermore, he is the one who is accusing the Fed of being too soft on interest rate cuts, slashing interest rates, removing members of the FOMC, inserting his own people into key positions, and essentially taking over the Fed. This calls into question the central bank's autonomy. On top of that, our creditors are understandably worried. Also, the media is acting as if nothing is wrong. I overheard someone claiming that institutional investors have been the ones pushing individual investors. No, that's incorrect. This is completely unrelated to individual investors as far as I am aware. Retail sales have been flat. The pace has slowed down a bit, but it has risen up slightly in the past several weeks. Not only at Schiff either. Soon, the general public will be able to participate in this trade. At long last, the word is getting out to investors by the Wall Street corporations that operate on Main Street to diversify their holdings into gold. They are not to blame for the surge. With such little involvement from individual investors, the price of gold has risen from 2,000 to 4,000. Global central banks have been the driving force behind it all. Furthermore, the purchase activity by global central banks is far from over. This customer is a repeat shopper. Their divestment fund is so large that they can only afford to purchase gold. The investing public has just recently joined. Since central banks were never involved in the silver story, the upward pressure on gold will intensify. The silver market was so sluggish because of that. I think silver is currently being purchased at a low price, either by individual investors or by certain institutions that have recently come to appreciate how inexpensive it was. I still consider anything under 100 to be inexpensive. Therefore, silver at $50 is a steal. Reason being that in 1980, some individuals paid $50 for 1 ounce of silver,